Howdy, hot shots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. Ulti is trading at about 547 right now. Some people in the comments were saying they thought their broker was saying there was going to be a 38-cent dividend. The estimates that I'm seeing and the declarations that I'm seeing are 9 cents for the week, which makes a lot more sense considering the price that Ulti has been at in recent weeks. Yesterday, I did a little bit of a thought experiment with you, wondering if they had not used the protective puts, if our return would have been higher. Obviously, a lot of you had great comments in the down below that I read through all of them. I tend to agree with a lot of you that because of recent stock performance, Ulti's share price may have been hurt even more because those protective puts did keep us from a big downside a couple times. So there would be bigger downturns if those puts weren't there and the stocks are performing very poorly. I still don't know. You'd have to have every intraday trade and then do all the calculations to figure out if the cost of the puts paid off over time. Sometimes I did see them pay off, and I was happy to have them when they did pay off. Now, how Ulti handles those puts when they're in the money, I'm not sure. Are they rolling them down to lower strike prices to lock in the gains that they've had on the puts, or are they just kind of holding the puts and riding them out till the end of the week and then settling them? Because if they were rolling them down to lock in the gains, that might actually even make those put positions profitable. But if they're just leaving them stagnant and not really actively trading those puts as they go in the money, I'm still not 100% sure that higher yield might be better for us. But if they were actually rolling them down, like say your stock is at $50 and the stock goes down to 48 and you've got 45 strike puts and those puts go up in value, are they now rolling them out or rolling them down to $44 strikes or something like that to lock in some of those gains? If you have a $50 stock because it's gone down and you have a $50 put, you're at the money right there. So can they then roll it down a little bit, or are they just sitting on it to see what happens? Anyway, I'm not an expert on their intraday trades, and so I can't tell you for sure whether or not the higher yield would be more profitable than the puts have been. However, I have another thought experiment for you. We have talked multiple times about how dividend capture doesn't work with really anything. I've never seen, maybe somebody could correct me, maybe they've done it successfully. I haven't seen dividend capture work. I've looked at it several times. I've looked at different ways to do it. I've never seen a way that it can work, because as soon as a stock or an ETF or whatever opens up trading on X dividend date, it will open up the amount of the distribution or dividend below what it closed at the day before X date. So if you're buying the day before and then you're selling on X dividend date, you're just trading dollars, right? That's what a lot of people complain about with Ulti to begin with, is that you're just putting money in and then getting your own capital back. That's the allegation that people make against Ulti. I don't actually think that's true, at least not completely true. They are generating premiums. They're just doing it at the cost of capital. So when we're getting our distributions, maybe some of it is actually, I know they're coding it as return of capital. Maybe some of it actually is. Maybe they are dipping into the fund in order to keep that yield up. And it does say they can do that on their website. So it is quite possible, but they are generating premiums. So a lot of that distribution is coming from the premiums that they earned throughout the week. And then they're paying it out, and they might have lost capital in order to get that premium. So it's kind of the same end result, but it's not the same process. But there's still a ton of people out there who think that they are doing something big when they go into a dividend recapture. I see all the time people online asking and saying that they buy right before X dividend date and then they sell on X dividend date. And so they think they are capturing a dividend. They think they're doing something. And maybe sometimes it does work out. I believe that that's due to market fluctuations. I don't think it's actually due to a dividend capture or, a distribution capture, because the NAV is reduced by the amount of the distribution on X dividend date when it opens up. So I don't think they're actually doing anything except potentially creating a taxable event. But I'm also not an accountant, so I don't know. Here's what I've been trying to form into a coherent thought. And once again, I'm going to ask you guys to bear with me and kind of hopefully understand what I'm getting at. Ulti is an extremely large fund, and it's become very popular. They have a lot of money going in and out of Ulti, okay? And I've told you before, some people come on here and say, oh, it's a Ponzi scheme. They're paying you back with other people's money. That is not the way that I understand that it works, okay? Open-ended ETFs like this, when they get extra funds, they give that money to an authorized participant. The authorized participant then goes and buys the underlying shares on the market and delivers them to the ETF, who uses them to create new shares. That's why if you watch the outstanding share amount will go up and down on an open-ended ETF. So they are taking people's money and they're creating new shares. Now, when people sell out of the ETF, then they go and give those shares to the authorized participant, who liquidates the holdings, okay, and then gives the money back to the ETF to reduce the share amount. This is why I've told you before that we cannot make a significant change in the market value of Ulti. People come on here and say, oh, you're pumping Ulti. Well, I can't pump Ulti. Nobody's going to be able to pump Ulti, because even if they get a bunch of money in, they just go and create new shares. It doesn't make the market price go up. So, I suppose, and I think I've mentioned this before, I suppose that there is a mechanic in which you could kind of make Ulti go up, but that mechanic is that because so much money flows in, it's given to the authorized participants and they go and buy the stocks on the, in the open market, that enough money flows into Ulti that it then makes those stock prices go up, the underlying stock prices go up, and then that translates to a higher NAV for Ulti, but we are not directly impacting Ulti's price. Now, in the overnight markets, like when it crashed on Robinhood, they were able to affect the price. Well, that's because Ulti wasn't operating; it was outside of market hours, and so they weren't creating new shares, and so there was a very limited pool of shares available on Robinhood in the 24-hour market, and so the price could move. And so I think that, perhaps in the short term, if there's more demand for the shares than there is supply, maybe the market could move it a couple cents, but it's throughout the day they're creating new shares. So it doesn't last very long, and it's not a very big impact. That is the way that I understand it, and that's my opinion. And you guys can definitely comment down below if you think that there's some other mechanic that I haven't thought of. But because it's so big and because the distribution is so large, there's a lot of people who talk about how they are using a dividend capture strategy on Ulti. Now, whether I think that particular strategy pays off or not is kind of beside the point. Throughout the week, Ulti is utilizing their underlyings to generate premium with which they hope to pay their distribution. I want to know if we are being robbed of our NAV by other people's or other institutions or whoever's doing it distribution capture strategy, okay? Because all week long they're using the underlyings, the stocks that we own via the ETF, to generate premium. Anybody that piles in that last day is getting new shares that last day, on Wednesday. because Thursday is ex-dividend date. So if they're piling in on Wednesday in the hopes that they're going to sell on Thursday after they got their distribution, and they're going to sell on Thursday and somehow keep that money. Everybody who piled in on Wednesday and got all those shares created, they weren't invested all week long. And so their funds and the stocks that they own via the ETF weren't available to Ulti to generate premiums on all week long. Okay? But now there's an estimate or a declaration of what the distribution will be. And those people, because they piled in last minute, are getting that distribution. So their funds were not there all week long to generate income for the fund, and yet they're getting paid out a distribution. Now, I don't think it's profitable because when it opens on next dividend date, their shares are reduced by the cost of that distribution anyway. But what I am saying is, are they essentially robbing us because we've gotten the premiums all week long, and those should be divided? And listen, I'm not saying this is a moral issue. I'm not saying that they're intentionally robbing the fund or us as holders. And I'm not saying that they should be stopped. I'm just wondering if, because it's so popular and because it's so big and there's so many inflows and outflows, if collectively this dividend recapture or this dividend capture strategy that people are using is basically taking money that wasn't earned by Ulti all week long and having it distributed to them, and in turn, it's reducing the NAV of the collective shareholders that were in it all week long. Because if there's, let's just for round numbers say there's 10 shareholders, and Ulti sits back and goes, okay, we can give them each 10 cents per share because all week long we've made premium. Well, now on the last day before ex-dividend day, people pile in, and so now there's 12 shareholders. Well, now Ulti has agreed to pay out $1, 10 cents per shareholder, and now all of a sudden they're paying out $1.20. Okay, so that 20 cents has to come from somewhere. Now, my assumption would be that it comes out of the share price of the people that bought into it the previous day. But I'm also wondering if there's a way that it's actually coming out of the NAV of the fund. Like when the authorized participants give the shares to Ulti, is Ulti also withholding, and this would be something somebody who has a lot of technical experience would have to answer. I definitely don't have the answer. I just want to know if somebody else out there has the answer. Are they setting aside a portion of that person's new share to pay them the distribution that they know is impending? Or is it potentially coming out of other people's shares? Because then it could almost be like a reverse Ponzi scheme where the newest people get the distribution, but the people that were there aren't being paid with new people money. The new people are being paid with the existing people's money, which would be like almost like some sort of a reverse Ponzi scheme. But I don't think that Ulti is like defrauding anybody in any way. It might turn out to be a bad investment, but I don't think that it's intentional. It's just what's happening with the way that the market's been and the way that their trades have been. But I'm just wondering if those new people piling in for a dividend capture, are they getting paid back their own money, or are they getting paid back out of the fund money for which they didn't participate in all the income generation? And I hope that you guys can understand what I'm getting at, because I know it's kind of an abstract concept and it's hard to think about, and it's kind of difficult to do the math, especially when you don't have all the numbers available to you. But if one of you guys that does have this knowledge, could come down below and give a good explanation or tell me if my thought process is wrong, I'd appreciate it. I just sitting here and talking through it with you guys, I would assume that because the NAV is reduced by the amount of the distribution on ex-dividend date, that anybody that was in there beforehand is essentially getting paid back their own money instead of money that they would have been able to earn the whole week. But it's definitely something that was interesting for me to be thinking about, and I wanted to share it with you, D-Gens. All right, talk to you later.